I get to always wear two hats that define me. One is data scientist and the other one's entrepreneur. And invariably, the entrepreneur gets the question along the way of, how did you decide whether or not to raise capital? Why are you bootstrapping this company? And I get that question from three different audiences. And so I give three different answers, but they have to be consistent with one another. So I thought I'd share some of that. The first group would be other entrepreneurs. They want to know, like, did you raise capital? Why didn't you raise capital? My first startup, we didn't raise any capital. A little bit different at LiftLab. We raised some capital out of the gate. They want to know why I changed my mind. The main motivation there was we understood this problem to be a really hard problem. And we knew that we were going to need some outside resources to not take years to solve it. I almost would call it common sense advice that you hear thrown around, which is only raise smart money. And what do you mean by smart money? Right? I think it's money that is, in our case, all the way to the point of, if we're working on a problem shoulder to shoulder with a client, we may actually send a mathematical formula to represent what we're working on in first principles and get a reply back with a revision to that formula. I don't think you can make an example that's any smarter than that. And I feel really fortunate to have that level of collaboration. It's not every day, but it exists in the capabilities of our investor base. And that takes me to prospective clients. I mean, they're in every bit their right to ask, where are you financially? What are you raising a lot of capital? Do you have big investors? And I get to say, no, at the rates that we're growing, we're not raising a lot of capital. We frankly don't need it. And I also get to answer that keeps all of our incentives in line with yours. There's a graveyard of startups that have raised too much capital and really we're growing for growth's sake. And I like to grow in the shape that the market can support. And that puts our incentives in line with the customer's incentives. And it ends up being very reassuring for them to hear that. Another group that this certainly would affect, and I'm going to get questions about, and I've learned to handle, are from prospective employees. They want to know how much money is going into this thing. How fast are we growing? And I love giving this answer, right? Having built a Bootstrap company and watched employees have a nice seat at the table, that's what I want to ensure here as well, is that there's plenty of this company to go around the employees, that they're kind of well taken care of, and that they're clearly our incentives are aligned. In that same conversation, I leave the door open. We have a few moonshot ideas across the team of things we may want to go and build where we would once again want to raise capital. And so if we decide to do that, it's because we have a very clear path and we don't want to wait in order to build it. And so that impatience sometimes pays off, and we modulate that. And so far, I'm really happy with the decisions that we made.